All right, let's talk. Have you ever paused your investments telling yourself you're just gonna wait for the dip? Yeah, I thought so. Well, listen up, because this might just be the most profitable 5 minutes you spend all year. We're about to dive into the real, painful cost of trying to time the market.
And you know what? We're gonna fix that today. And it all comes down to just 2 words. Throttle, don't flip. This is it. This is the mental model that's gonna stop you from, let's be honest, lighting your money on fire. It's about keeping your main investments on autopilot while giving that little voice in your head that screams, do something, a safe place to play.
Okay, first things first, let's really put a name to this problem. I call it the costly switch. And I have a feeling, a strong feeling, this is gonna sound very, very familiar to you.
So be honest with me for a second. Have you ever done this? You see the market getting a little choppy, right? And that voice kicks in. You know what? I'll just pause my automatic buys, just till things cool off a bit. And then what happens? 2 months fly by, prices are somehow higher, you feel like an idiot, and you're still sitting on the sidelines in cash. Sound about right?
Yeah, that feeling, that gut punch of regret, it actually has a name. I call it the switch tax. It's the penalty you pay for those emotional round trips. You know, the panic selling, the even worse panic buying. But even bigger than that, it's the massive cost of missing the market's best days, which of course always seem to show up right when you're not looking.
So why do we keep doing this to ourselves? It's not because we're dumb. It's literally our brain chemistry working against us. First, you've got this thing called loss aversion. Put simply, seeing red on your screen hurts about twice as much as seeing green feels good. It's just wired into us. And then there's outcome bias. This is where your brain sees one bad day and decides to just tear up your entire long-term plan based on that one single event. It's a perfect recipe for self-sabotage.
All right, enough of the bad news. So how do we actually fix this? It's simple. We're gonna replace that broken all or nothing on-off switch with a dimmer. This, my friends, is the throttle solution.
Just look at the difference here. On one side, you've got the flipper. This is pure emotion. It's either all in or all out, on or off. And what does that get you? A whole lot of regret. But on the other side, you've got the throttler. This is systematic. It's calm. It's like having a dimmer knob that you're just based on a set of rules you made when you were thinking clearly. Small, pre-committed adjustments, zero drama.
So here's how it works. The model is super simple. Just picture a 2-lane highway. Lane 1 is what we call your baseline. This is your core, your no-drama portfolio. It's globally diversified, it's fully automated, and here's the golden rule. The one rule you never, ever break. It never turns off. Got it? Okay. Then you've got lane 2, your tilt. This is a much smaller, capped part of your portfolio. We're talking maybe 10–20%. This is where you can scratch that itch to do something, but, and this is key, only within a strict set of rules you wrote down beforehand.
Okay, I know what you're thinking right now. Yeah, but what if I miss a big crash? That's fair, but you're asking the wrong question. The real question is, what if you miss the recovery? Let's just look at the proof.
Okay, brace yourself, because the math on this is, well, it's brutal. This chart right here shows what happens to your money if you stay fully invested versus what happens if you miss just the 10 best days over the last decade. Just 10 days. The difference isn't just big, it's absolutely staggering. And guess what? Flipping that switch to off is the #1 way to guarantee you miss those days.
And here's the thing, the really crucial point. The market doesn't send you a memo, right? There's no calendar invite for its best days. In fact, study after study shows the same thing. The best days almost always show up right next to the absolute worst days. They're like best friends. So if you're constantly trying to dodge the bad days, guess what? You're almost guaranteed to miss the great ones too.
Okay, so we've covered the why, you get it, the what not to do part is clear. Now let's get to the how, the good stuff. I'm gonna give you a dead simple 3-step playbook you can literally do today.
All right, here we go. 3 simple things. That's it. Number 1, pull out your phone, open a notes app, and start writing down your rules. Don't worry, I'll give you a template in just a second. Number 2, log into your brokerage account and automate your baseline contributions. And don't just set up 1, set up 2 per month. Make it relentless. And number 3, do this right now. Open your calendar and book a recurring 15-minute meeting with yourself. Just call it throttle review. Done.
And look, your rulebook doesn't need to be some 50-page thesis. Just define 4 simple things. 1, what's your signal? What piece of objective data are you going to look at? Could be something simple like a 200-day trend. 2. What's your check date? When will you look? Key here, only once a month, no peeking. 3. What are your levels? Based on the signal, what's your move? And finally, and this is maybe the most important part, you have to log it. Write down your decision and walk away. No changing your mind mid-month. That is how you build discipline.
But wait! I can hear you shouting at the screen right now. But what if a crash seems obvious? I mean, everyone on Twitter is screaming about it. You know what? This is the single biggest objection I hear. And frankly, it's the one that costs people the most money, period.
I need you to really let this next sentence sink in. Your edge is not predicting the future. Let me say that again. Your edge is not predicting the future. Because think about it, if a crash were truly obvious, it would have already happened. It'd be priced in. Your real edge, the only one that actually lasts, is pre-commitment. It's having a plan written down and then having the guts to stick to it when every fiber of your being is screaming at you to run.
Okay, so let's wrap this all up. If you forget everything else I've said today, just burn these 3 things into your brain. Number 1, you never, ever pause the baseline. Not for anything. Number 2, use that small cap tilt to scratch that I gotta do something itch. And number 3, let your rules, not your moods, make your moves. Simple as that. All right, now it's your turn. I want you to be totally honest. Drop a comment below right now. Which one are you, a throttler or a switch flipper? Hey, no judgment here at all. But just admitting it, that's the first step to fixing it.
And hey, if this simple idea just saved you from making that classic "I'll just pause till it cools off" mistake, do me a favor and hit that like button and subscribe, because you're going to want to be here for our next one. We're breaking down the 20-minute annual reset, the 5 critical numbers you absolutely need to lock in before the year is out. Trust me, you are not going to want to miss that.